So let's say we have a 401k, and let's say that's you. And over the years, you've been investing into this 401k plan, and over time, let's say you're getting close to retirement age, that thing has grown. Maybe it's worth $500,000. I had a gentleman the other day that came in. He was single, he's on Social Security, pension, has a nice 401k, and this was his very question. I want to make sure that this 401k goes to my kids because I really don't need all of it. Well, the problem is if he just lets it grow, the tax tumor within that account is going to grow like crazy. So in other words, we have to imagine, remember, some portion of this money is really the IRS's. So many of you forget this. You're looking at your 401k statement, whether it's $100,000, $300,000, $500,000, $1 million, lump sum pensions, it's all the same thing. A lot of this money, folks, is really not yours. It's the government's. And the problem is we're in these low tax brackets. I mean, we're at some of the lowest tax brackets we've ever been in. They're set to expire in 2026. So the question is, what is your game plan for using and enjoying this money now? And let's say you don't really need all the money. How can we pass some of this money off to the kids now while they still need it on a tax favorable basis? Well, let's take a look at this strategy. So in this case, what we're going to do, we're going to intentionally, in this example, pull out $8,000 per year. And you say, well, Tony, isn't that taxable? Well, depending on their tax bracket, yes. So we're going to use this example. So let's say you're in a 20% tax bracket. That means roughly, in this case, $1,600 a year is going to the government, right? That leaves us about $6,400 a year. And what we're going to do now, since that's after tax, a tax-free gift to the kids. This is wonderful, folks, because in this example, little Johnny can put $6,400 a year into a Roth. Here's what I like about this, and never pay taxes again. So one day when little Johnny now has $500,000 or whatever little Johnny's going to have one day, and this money is used for his or her retirement, it's tax-free. And when little Johnny or little Susie or whoever, they eventually pass away, anything left goes to their kids, your grandkids, your great-grandkids, completely tax-free. So my question is, folks, if you don't have a plan like this, if you don't have a fiduciary that's trying to think through strategies like this, if not, why not? I would like to be that person that sits down with you and looks at the whole picture, not just where you might have your 401k, or it's not just as easy as rolling it in and slapping it in an annuity or having somebody charge you 1.5% or 2% to try to manage this stuff. Retirement planning is not money management. That's not what we do at Tony Walker Financial. We're not wealth managers, we're retirement planning specialists. Our job is to help you use and enjoy this money before it's too late, at the least amount of taxes, the least amount of fees and cost, and more importantly, through our beloved mailbox money, make sure you don't run out of money. If you'd like to sit down at no cost or obligation to meet with me, why don't you log on right now to TonyWalkerFinancial.com, click on that Let's Get Started button, or call the toll-free number on your screen. Remember, there's never a cost or obligation to meet.